It's Wednesday, the 25th of May, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Amyler.
Good morning, Michael.
All right, Sean, we've got 5 stories to rip through in 5 minutes, so let's get stuck into it. Story number 1, I tell you what, it was not a good day yesterday to be an investor in technology companies. The sell-off in tech stocks has gathered pace, with the local all technology index falling sharply yesterday, taking the 2022 fall to 30%.
That's right. It's happening here. It's happening globally. Remember this time last year, investors couldn't get enough of tech stocks? Well, no one wants them at the moment. In fact, over the past 4 weeks locally, the tech stock index is down 13%. The mathematics is simple. Rising interest rates make future earning streams less attractive. But the sell-off is beyond maths for many tech stocks. All the bring forward of purchases during the pandemic has hurt the sector. Companies without earnings are being hammered. Other companies that do well in economic upticks are outperforming the tech stocks. It's kind of like a pandemic hangover. On Wall Street yesterday, Nasdaq-listed Snapchat fell nearly 30% after it warned that rising interest rates and inflation would hurt earnings. It's not alone. Netflix is off 70% this year so far. Other big ones like Meta, which owns Facebook, Alphabet, Microsoft, Apple, Amazon, they're all down. Locally, it's the same story. REA Group's down 36% this year. WiseTech Global's down 31%. Xero is off 40%. Where does it end? Well, from a macroeconomic perspective, there needs to be a sign that the pace of inflation is slowing. There needs to be a sign that interest rate rises won't go on forever. At an individual company level, tech groups that are losing money will struggle. Now, we're not an investment podcast. Go and see a financial planner. But wow, that sector is really hurting at the moment.
Yeah, it's getting hammered. All right, story number 2, Sean. Prime Minister Anthony Albanese has told leaders of the US, Japan and India that Australia will take ambitious action to tackle climate change.
Yes, he was addressing Quad country leaders in Tokyo, and he also said Labor wants Australia to play a greater role in Southeast Asia and supports an independent Taiwan. Mr Albanese said Australia remained resolved to secure regional peace and stability. It demonstrates, Michael, that climate change is going to really be front and centre of the government over the next 3 years or so. Just in terms of the latest count, the ALP is in front in 75 seats, though only 74 are assured. Of course, they need 76 for an absolute majority. Coalition's leading 58 seats, though market watchers say only 55 can be counted. There's plenty of fallout going on, particularly in the National Party, with the spill of the leadership next week.
Sean, story number 3, Qantas has purchased a majority stake in online travel business TripADeal.
Yes, it will push Qantas further into the growing online packaged holiday booking market. The airline's taken a 51% stake. It'll align it closely with its loyalty business. If it works out, Qantas can buy the remaining 49% in the future. What I thought was interesting, it's the second deal this week from a major company buying an online e-commerce group. The other was Woolworths, which bought 80% of ASX-listed My Deal. It just demonstrates how these big legacy companies want to push hard into online trading, but need the help of more nimble startups.
All right, story number 4, Sean. We've got a cracking couple of stories to finish on today. Story number 4, the top 50 richest people in the world have lost more than $500 billion US this year, at least on paper.
That's right. The top 50, which include Elon Musk, Jeff Bezos, Bill Gates, Warren Buffett, have lost about $563 billion US, according to the Bloomberg Billionaires Index. If you're interested, that's about 800 billion Aussie dollars. Of course, that's on the back of tumbling share prices. Elon Musk has been hit hardest. He's off about 69 billion US dollars. Jeff Bezos lost about 61 billion US dollars. The other big loser was Bernard Arnault, France's wealthiest person and CEO of luxury group LVMH, Moet Hennessy, Louis Vuitton. He's dropped about 55 billion US dollars.
All right, last one, Sean. Story number 5. How about this? There was an auction for a Chinese lithium mine. And how many bids do you reckon I got? Maybe 50, 60, maybe 100 bids if it's going well? No. This auction garnered 3,448 bids. Incredible.
Hard to imagine. Imagine if you're selling a house and that was lovely.
Extraordinary.
The stake in the company that owns a lithium mine in southwestern China sold for about $300 billion US in the end. That's nearly 600 times the starting price. It came down to 21 bidders and almost 1 million people watched online. Lithium, of course, is used in virtually all electric vehicle batteries. It is the hottest commodity around the globe at the moment.
Yeah, that is an incredible story, that one. That's it, the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 25th of May, 2022. Remember to hit follow on the podcast, and if 5 minutes isn't enough, then you can find our longer daily show called Fear and Greed on your podcast platform. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.